Hi everyone. Welcome to the TimingResearch.com crowd forecast news for March 7th, 2022. We are recording this at 1 p.m. Eastern time, and this is episode number 334, a special preview episode for the next big Synergy Trader event, which will be starting at 10 a.m. Eastern time tomorrow, and we'll talk more about that in a little while. But right now, my name is David Kosmeter. I'm the creator of TimingResearch.com, and today I have arranged for Archna Jagtiani of ArchnaTrades.com, Erin Swenlin of DecisionPoint.com, and Anka Metcalf of Trade Out Loud to be here. And Anka is going to be moderating, so I'm going to go ahead and turn it over to him. Sorry, go ahead and turn it over to her. I'm so used to saying that for when Jim's on.
All right. Thanks so much, David, for having us. This is such a great opportunity to get a chance to speak before the event. I'm also going to take away the screen. I think I just need approval to do that.
Oh, you want to share something?
Yeah. Do you want me to share the screen, or do you want me to talk on that screen? That's fine. I thought you wanted me to share the screen.
Oh, yeah, typically I just share the screen.
Okay, cool.
And
cool,
then
perfect.
I'll just bring up charts for whatever you all
talk perfect about. That's even better. That's even better.
So you just have to talk, and I'll show the S&P
perfect
charts and everything else.
Okay, awesome. Thank you so much. All right, so good afternoon, everyone, and welcome. David was so nice to invite us women to talk about trading, and this is before the 4th annual Women Teach Trading and Investing that is going to debut tomorrow. It's going to be a 3-day event. It's going to be jam-packed with trading education, trading strategies, trading ideas. If you're new to trading, tune in to tomorrow's show because it will be worth your while. And there are 3 days that are jam-packed, and the sessions, all of these sessions will be recorded. They will be available on David's website, on the Timing Research, as well as on the YouTube channel, his YouTube channel, the Timing Research YouTube channel, and any available podcast. So welcome, everyone. First of all, I would like to invite David's guest, Erin and Archna, to please say hi, and let's kick it off with Erin. If you can have the mic, Erin, and just give us a little bit of description of who you are and what you do, and we're just gonna kick it off.
All right, sounds like a plan. I am Erin Swenlin. I am from DecisionPoint.com. I do technical analysis. Obviously, that's why a lot of us are here. I have 2 reports that I do. I have the DP Alert, which gives you kind of the general market conditions, participation, all of that, Bitcoin, crude oil. I cover all of the major asset classes, look at yields. And then I have DP Diamonds, and that is where I have a subscriber-only trading room on Fridays, where we do live looks at symbol requests, and we also do in-depth sector and industry group analysis in that trading room on Fridays. That's part of the Decision Point Diamonds report, and you also get 10 or more stock picks per week to look at. So if you are a big time trader, DP Diamonds is certainly for you, but I think that the DP Alert is a great companion tool so that you know what's going on throughout the markets. So that's pretty much what I do. I write for stockcharts.com as well as having those blogs.
Awesome. Thank you so much, Erin. And we will see you within these 3 weeks, and we will talk more about that after the event. Archna, you have the mic. You were a first guest last year, and it is great that we're having you today. Can you please tell us a little bit about yourself and what you do? You have a brand new company that you launched, I believe it was last year, and we're very excited to hear more about you and about your company.
Yeah, so I'm Archna Jagtiani, and I used to trade by myself, sitting alone. And then I started working with Samantha at trading. I'm still a contributor at Leduc Capital. I run a Discord channel there with all advanced options. So you'll hear me talk about calendars, diagonals, and all kinds of stuff. I even run my own Twitter trade alerts and option mentoring. So, and recently I have started my own Substack, which will be just daily levels of SPX where I think it doesn't go, and I sell premium for income. So these are all the things that I do.
Okay, that's fantastic. And we can't wait to hear more about your opinion on this market. But before we jump into this painful market topic, just want to let everybody know that my name is Anka Metcalf, and I'm the CEO and founder of TradeOutLoud.com, which is a trading education company that is specialized in educating individuals how to day trade, swing trade, and actively invest in the stock market and in the futures market. I have been doing this professionally for the last 19 years. And prior to that, I come with 10 plus years in investment banking. I specialize in high velocity moves, and that means that I'm going for a high reward to very little risk whenever I find the opportunity. And momentum, I trade a fusion of momentum with technical analysis. I'm also the designer of an institutional proprietary trading system that is based exactly on my fusion with the timing, with 8 layers of price support resistance, with specific trigger times that are designed for the New York trading session, with specific price zones, and also chart synchronicity and divergency. And if you guys want to hear more about what we do at Trade Out Loud, you can head on to our website, which is tradeoutloud.com. All right, so let's jump into the first question for today, which is pretty much going to be about the market, right? David already has the SPX up, and my question to you, Erin, is where do you see the E-mini S&P? What kind of price reaction are you expecting from the E-mini S&P this week, and why? And I know it's a crazy question because everything is so much impacted by the geopolitical context. But if you can, if the technicals are speaking to you in one way or the other, what is the S&P direction that you see it trade this week?
Well, my father and I have been talking about that the S&P is in a bear market. Now, of course, we've been catching a lot of flack for that because the S&P 500 hasn't been down 20%. It will be. We think that we're going to see even more decline here. But what's going to save us is all of these pockets of strength that we can take advantage of. And I have a couple of thoughts about that, but we can move to the next question. But one of the things that bothers me about the technicals when you look at this chart is that, we started with a declining trend. If you draw from, let's see, the January top to the February tops there, if you draw a declining trend line there, you'll notice that the last 2 times that we rallied, we did not make it to that declining trend line. And now we have a more steep declining trend line going on. So that is something that's worrying me in the longer term about this market. Of course, I have plenty of indicators, and a lot of them are exclusive. They're not, I don't believe, on TradingView, but all of my indicators are telling us we're going to still see the move going down. I'm looking at, 40,000 or 4,000 on the S&P, but I think we could move even lower than that. I usually follow the SPY, and I'm looking at 350 for the SPY. So it's bad news out there, and I'm sorry, but we're in a bear market, and I think we've got a lot more to endure. But we need to take advantage of those pockets of strength out there if we're going to have to be in the market.
Thank you so much, Erin. I kind of agree with you, but I'm going to share my opinion later. Archna, what's your take on the E-mini S&P? What do you think the E-mini S&P is going to, how is the price action going to react this week based on the technicals, fundamentals, and everything else that you watch, any indicator that you watch, and also even into the long run?
Yeah, so I am also looking at somewhere the 30-day fib target that I have is around 39.80, 39.86. So that's where I definitely think we are going to test. And, I have a trend line that comes close to 39.20. So, yeah, we are definitely testing 3,900 or so before we can have a meaningful bounce is what I am thinking. But there are some pockets of strength, as Erin was saying. So yeah, that's what I'm taking advantage of.
Thank you, Archana. It is a very difficult pattern with a very difficult, and we're trading definitely in a very difficult market environment. I have to agree with Erin and with Archana. I as well see overall the SPYs lower. And of course, it's going to be contingent whether there's going to be a resolution or not with the Ukraine and Russia situation. I just read a news that came in shortly after we came on air, and they were saying that there was not much progress to the discussions that were held today. So that is going to add more pressure on price. I think that going towards the end of the week, we are just going to get a little bit weaker from the technical standpoint. Today, David, if you can put a weekly chart very quickly up. The weekly, when you look at the weekly chart, we have just breached last week's low. And basically right now, we're testing and we are retesting the low from January 24th, which is that little peekaboo, right? The first peekaboo into the 20 simple moving average. I think that that's going to be one line in the sand, because the 4,200, the 4,220 is a critical level. That level also comes, you could see David's dotted line on the platform right into January. And you could see that the price is trading well under the January lows. But if you go a little bit far back, there's a little pivot high, and that pivot high is all the way, it's actually all the way into May of 2021. So we're still trading into support. Now, one thing about volatility and volatile markets is that when the price is pulling back, it creates a large oscillation. So you will have a broader support zone. So for example, right now in the SPX, you have a really massive support that is actually trading between 4,100 and, believe it or not, all very close to 4,300. So it's a huge price oscillation. One thing that I have noticed is that every single time we pushed into the 4,100 and 4,200 in the SPX, we found bottoming tails, and that is a sign of being bought into that area. The other thing that I'm looking at is that I think, David, the 20 SMA is the yellow line, if I'm not mistaken, and that is the ADMA. Okay, gotcha. Yeah, so it is, yeah, the ADMA, I use the 10 EMA, so the ADMA or the 10 EMA usually creates pressure to the downside. And once the price starts trading below that 10 EMA, and with what Erin was saying earlier, because you have the structure of a bear market, even though you don't have to decline, because you have all the proof, you have the high and you have the confirmation of 2 lower highs and 2 lower lows if you're looking at a daily chart. So that is the confirmation for the downtrend formation and for the price to accelerate lower. And the more the price is going to stay below that 10 EMA, it'll engage into a power trend lower. And the fact that we're not getting into any kind of resolution, I think that's going to be really bad for the market. The market is going to see a lot of pressure. So this is my point of view on the technical aspect of the chart. Let's continue with the next question is, Erin, why do you think the market is heading lower? Are there any fundamentals that you are watching? Are you, obviously, I think that you're tuning into the news to see what the latest developments are from Russia and Ukraine conflict. Is it fears from FOMC from a rate hike? What is your take? What do you think is going to make the market move lower besides the overall aspect of the bearish market? With which I totally agree.
Well, yeah, I think the obvious is what's going on, like you said, with the war, etc. I tell my subscribers, and they know me well, that I'm a technical analysis purist. So I rarely think fundamentals, and that's to my detriment or or the other way around. It doesn't matter. That's who I am. That's how I do it. So I mainly pay attention to those technicals. However, when you have these overreaching themes, of course, of inflation, I think that's a huge one. We have the bubble that has been blowing up in the housing market. I mean, we're really set up kind of like where we were back in 2008. I mean, we have, home prices have just skyrocketed. And now we're looking at the 30-year mortgage rate just going straight up vertically. And that's going to put huge pressures on the housing market and prices. So that's a bubble out there. There's the crypto bubble, if you will. There are a lot of these overreaching themes that are going to not help the market. And honestly, if some of those bubbles end up getting popped in the middle of this, it could be even darker than what we're seeing now. And I hate to be talking like that. I like to have a little bit, I'm a Pollyanna, so I usually like to have something great to say on the other side, which is like we were talking about, all of us, finding those pockets of strength, because when you're looking at a market that's been going down this much, this fast, and then you see those pockets of strength like oil and some of the other chemical areas, mining, you just know, I mean, the rotation is pretty clear. You have to move and rotate into those groups. But yeah, I think the overarching, inflation, we were already set up before this even was, it was kind of in the back of everybody's mind about this war, but we all of us were already talking about all these other problems. So, and if one of those bubbles bursts, oof, it could be ugly.
Oh, I agree. 100%. Archna, is there anything that you would like to add? Anything that Erin did not really tap into, because like she pretty much hit every point on the agenda?
Yeah, I mean, I don't want to be this doom and gloom though. We are definitely going to be eating food, and if everybody's talking about inflation, so they're going to be eating more at home. So I am long McCormick, which is spices. I like spice. I'm an Indian by heart. So there are places where you can hide and still make money. And then again, gold is there. So ignore S&P and buy spices and gold.
There you go.
I like that. And I like that combination. All right. So I hate to, yeah, here's McCormick. Yeah, McCormick pushing nothing to see here.
Is that the right one?
Yeah. Yes, this is it.
Okay.
Right. So yeah, spices are good. We all need spices. Again, just like Erin and Archna, I don't like the gloom and doom, but hey, here's the bright side. There's always a bullish market somewhere. Okay. This time around, the bullish market was in oil, and it didn't come as a surprise because oil was on demand and it was heavily bought by institutions. Starting with 2020, and that was in April of 2020, for the first time when it went negative, and then it split. USO, for example, split it started to move higher, exponentially higher. So it had it didn't happen overnight. So there is a huge demand for oil, and the fact that we have this huge demand for oil is not just because it's out of the blue. Remember, to power those electric vehicles, you have to convert something into electricity, right? So whether it's coal, whether it is crude oil, whether it's natural gas, that is what's producing the green energy. That's what's producing the electricity. So there's still going to be a huge demand for oil. Oil, in my personal opinion, is not going to be topping soon. We could talk about oil, for example, for trading ideas down this line a little bit later. But the conflict right now is definitely fueling oil, is fueling natural gas. And you have to literally tiptoe around and do a lot of scanning before you actually take some trades, because, and this is one of my personal opinion, I think that when the oil market is going to come down, because at one point it has to come down, it has to pull back. We will and have you noticed they have raised the margin requirements? So they raised the margin requirements last week, and they raised the margin requirements again today in crude oil. So things are getting, a little bit choppier in oil as well, and we had a pullback. So bottom line is that we do have the rate hike that is coming next week. And I think that traders and investors are going to definitely be on the toes for more clues. And, have you guys ever thought, are they ever going to reconsider taking into consideration this conflict? I mean, this would be very interesting to see. Or if they are not going to raise it with the expected percentage, then we may get a reduction, and that way the market is going to see it as positive, and we may have a relief rally going into next week into the FOMC meeting. We'll see about that. And then again, we're hearing more and more about about Chinese aircrafts that are entering the Taiwan airspace, and we could possibly have, a looming conflict over there as well. So that is going to add to the extra pressure on the market. So these are things that I think investors are very careful where they allocate their funds. Definitely, we had nice run in oil and coal stocks and uranium stocks and other sectors, but this is definitely something that we need to, we have to be on our toes every time. Okay, so let's talk right now. And Erin, I'm going to start with you. Do you have something right now that is hot on your radar? Something that you look at and you cannot just stand the thought of not taking the trade?
Well, I have to tell you, so what's on my radar? So first of all, I've only been 10% exposed to the market probably since December, maybe November. My subscribers will tell me. So I am looking at expanding my exposure now, which is unusual in a bear market. I usually am in mostly cash like I have been, but because there are these areas of the market I'm interested in, there are a couple of energy stocks that I like right now, but what's really interesting me as a gold miner, I don't have a gold miner yet, and I want one, and a specialty chemical company. These are the companies that produce fertilizers. So there's like 4 of them on my list. I'll share a couple of them, but Mosaic would be one, MOS. That one is in that fertilizer chemical area. We've been watching this one go crazy, but I think there's still more upside to be had. CF is also in that same area. And you can see a really nice move going on there. And again, it's all about fertilizer. NTR would be another one. And yes, they're going almost straight up. But I think we're still going to see an opportunity here. I think they're still going to move higher. People are now just starting to figure out that these are good areas of the market. And then, like I said, gold miners, GDX, of course, is the ETF. And I think that looks good if you don't want to, get right into just a single miner. I think that still has a little ways to go before it hits that overhead resistance. But, mining and metals just in general, not even just gold miners, XME, I believe. So that would be another area that's pretty hot for me that I'm looking at. What else? You talked about consumer staples. We looked at Hormel last week, HRL on Thursday. We picked that one for diamonds. So that one is looking pretty good. In that energy space, I'm just throwing all kinds of symbols at you. Baker Hughes, BKR, is looking good. And I know that there's discussion that maybe energy is going to take a pause or have a decline. I think that certainly a pause makes sense after a vertical rally. And then finally, OKE, One Oak, I think looks good too in that space. So I know these are all vertical rallies on all of these charts I've shown you. And usually I'm a reversal kind of girl. I like to find them when they're just showing new strength. But I think it's a little too late to find the new strength. I think we're going to have to just piggyback on to the strength that's already there.
Oh, great names. And I hope you guys took notes, because these are every one of these stocks is worth buying on a pullback. Very, very interesting how they totally ignored the market. Some of the companies totally ignored the market and are trading, of course, on their own. Archna, is there anything on your radar?
Yeah, I can give you something in the same sectors that Erin was talking about, and they have not taken off. So yeah, WPM, it has earnings on 10th. WPM, Wheaton. Yeah.
Oh, yes. I like that one.
Yeah, it has not yet run up like the others, and it is just about to break out on the weekly, highs, and it has earnings coming up on the 10th. I saw some call activity also. So yeah, this is something that has not run up like Newmont and other mining stocks yet. I have a position in this. And then your ag space that you were talking about, I saw today on CTVA. It's an ag company. It does protection. It provides protection solutions for crop and seed protection. And there are more than 7,000 calls versus only 200 puts on it, 100 puts. So more than 6,000 calls came in, and it is breaking out. So there are stuff that has not yet broken out, and people are finding new things to play. And then even FANG, Diamondback in energy, it has not yet broken out on the weekly compared to Exxon and Chevron. So yeah, I'm looking at FANG, WPM, and CTVA.
Those are interesting names, especially that they're just on the verge of some pretty major breakouts there. So yeah, very interesting.
I have an AgTech company that seems to be breaking out that I like. You guys might find interesting. App Harvest, it's based here in Kentucky, and they do indoor grow operations for fruit and vegetables. So like huge greenhouses.
I think these companies are going to soar.
You have Sprout Farm also, SFM.
Oh yeah.
Yep. Very interesting. So there are hidden gems. Yeah, there are hidden gems, and I love the price point. I love the 30 any stock between $25 and $50. I love the way it'll has the potential to move, especially if you're a little bit of a long-term trader, and if you find these kind of setups that are really great for this market environment.
Yeah, and with the volatility being high, you're not risking a lot if you want to sell premium. If you want to sell premium, I mean, selling premium in Google seems, far-fetched for many. because of the margin that it requires, whereas Sprout Farm or WPM selling a put there to try and get some income with this kind of volatility. Yeah.
Yeah. Yeah. All right. So I'm going to give you some some of the things that I have on my watch, and one of them, David, is UUUU, so 4 U's. This is energy fuels. They're just getting ready to break out over $9. And I like this a lot. I also have MOS and CF, MOS as well. This on a pullback, I don't own it. UUU I do own. MOS I don't own yet, but I do have an alert into the $54 to $56 for the pullback. Also CF, and Erin mentioned CF as well, same strategy. And I have BG as well. And these are all in line with the same type of play that I would look for. I like the fact that they have started to trend nicely higher. Also, I have some other stocks that are like BTU, for example. All right, BTU. All right, BTU with a pullback today, right into the 20 SMA, and also minor support into the $20. I may leg into it tomorrow. I have to see how it closes today, but that would be an idea. The other one would be CCJ, that I like to see it over Friday's high. So over very close to $26, $25.85 or so is where I have an alert for a buy, for a potential buy. And I also have LEU on my list. LEU, these are some, and see the price point. I like the price point as well. So over this range on the daily, and as close as, as it gets closer a little bit to $50 mark, I would like to get a position. I could see a strong potential rebound back to $60, and long-term back to 70 to 80. So these are some of the things that I'm watching. We were fortunate enough this month and last month to have some really great calls in our service. We literally, less is more when it comes to this market environment, but definitely we had VIX, and we're still holding on to VIX. And this is going to bring a topic that, so VIX, here it is. I like to trade the VXX personally. So I'm in VXX. Here it is. And it's just getting ready to blast higher. I think that if it starts trading above $30, it's going to start moving higher. The weaker the market, the stronger the explosion into the VIX. So my first trade in VIX, I got it at 23 and change. I have added into VIX at 25. I didn't get a chance to add today because I wanted to add over 27, but it's still not too late after the show to add a little bit to it. And I really like VIX. So this is the hedging. We also have GDX and GLD from February 14th. And GDX, yeah, nice. Okay, yeah, perfect. Okay, so GDX definitely looks higher, and we have achieved several targets into it, but we're still looking for the room to $40. And if it breaks 40, then it's going to expand higher. So we had a play on metals in February, and we also went FCX. FCX just went ballistic right after our entry. We bought it at $46, and it went to $51. And right now it's on the pullback, so it may want to rotate. No signal for a re-add though. Also, some other trades that we had for today. That already, just snapped very fast higher. We have SLB, we have Halliburton, and we also had Rig that, here it is. Finally, they broke out. Little baby stocks, but Very, very strong. These are just some of the trades that we called this week and last week, and we play it safe. We went to the theme we went with the energy theme, and we went to protect our portfolio, and we went with the metals. And right now we have about six trades that we have for this week. So anyways, Erin, I'm going to get back to you. Do you find it useful to use some hedging? So if you're, for example, overly invested to the long side, do you find it useful to have some hedging strategies?
I typically don't do that. It's, I guess the best hedge for me is just dropping into a sector or group that is starting to improve. So, I manage my sector rotation. And if I have, a position, say in energy staples, and I want to hedge that, I might throw in something a little more aggressive. I have used the inverse ETFs now and then for that. I like the VXX like you were showing, but I typically don't trade hedge like that. I'm more interested in just rotating into the strength. I'm more of a buyer. I don't do options, so I'm kind of a different than y'all from that. But so yeah, it's more about sector rotation for me.
I like that, Erin. And I have to tell you something. When I started trading, I had a really great mentor, and these were questions that I used to ask. It's like, okay, so I have my portfolio. Do I need to hedge? How do I hedge? And my mentor used to say, hey, if you have to hedge, it means that you're wrong. So it means that you have to look for strength, or you have to exit the current position. So I love your answer.
Oh, well, good. I'm glad I got that one correct.
I was thinking like, wow, am I the only one? But there was the VIX trade was such a great inverse for the market at that time. Because it was too late for me to get into, for example, a SPY or a Q short position, or even a Russell short position, because they already ran. And with the gap downs, it's really hard to chase. So that is the only hedge that I could find that was still on the market.
Exactly.
I know, exactly. So you got to find what you find, and never chase the price, because when you chase, even the term chasing has such a negative connotation, because it means you're always behind price. You're running towards the price. You're never in line with price. You're chasing. So you're a loser. You know what I mean? Yeah. So, okay, Archna, what's your take on hedging? I don't do options. Erin doesn't do options. You bring light into the options world for us.
Yeah, because I do options, I don't only hedge, I buy puts too. And there are, with this kind of volatility, I'm doing not hedging anymore. I'm doing where I see that SPX is not going to go. So like today, I was like, it gapped up, right? We were going up in the morning. I sold call spread above 4,400 and made some in 15 minutes, half an hour. When it started going down, I was able to take some off, and I made my income for today. So selling call spreads or selling puts where you think you don't mind getting long, I do those kind of trades. Like right now, I have sold puts in XBI, which is the biotech ETF. It has been for 2 years, just going down. And I feel that in this kind of market, if today some of the other biotech names are also green, so I don't mind getting long at 75. So I sold. The volatility is at 92%. Trying to take advantage of this high volatility, I'm selling premium there.
Wow, that's awesome. It makes my head spin. I don't know about you, Erin, but it makes my head spin.
Yeah,
But
it's
only with the terminology.
I know exactly. But that, that is where a lot of money can be made, is in
Yes.
those options. It's just not my style of trading.
Exactly. It's not in my comfort zone either. So Archana, I think we envy you a little bit, because like you are so versed into advanced option strategies.
Yeah, I mean, currently I have a position as a SPY butterfly that I
Okay.
put in for some 25 cents per contract. But if it goes to 3,800, I can make 20 bucks of it.
Wow.
And if it doesn't go there by March 16th, I lose 25 cents, $25.
Wow, that's awesome. Now that's a great risk to reward trade.
Right.
And especially in this market environment where, you don't have the upside, you don't have the downside. So there's so much uncertainty. You don't know where the price is going to go. I mean, you look by the technicals, but even the technicals are very confusing right now. So it's better off. I mean, in my situation, it's, I'm just sitting on my hands, I'm not taking a lot of trades. I'm just going into where a little bit of relative strength is, or relative weakness for some shorter term trade opportunities. All right, so let's move on, ladies, to Erin. Do you have any special offers for our listeners today, or are you saving them for for our 3-day women event?
Well, I am saving the big one for Thursday, but I still have something that the viewers can still take advantage of. And I run a 2-week trial in my trading room. I'm going to offer that here at the CFN. And all you have to do, I'll put it in the chat, but if you use the coupon code DP trial with the number 2, you'll get 2 weeks of both of my products, the DP Alert and DP Diamonds, for free the first 2 weeks. And if you cancel anytime during that 2 weeks, you still get those 2 weeks. We think that if you try it out and you watch us for 2 weeks, that more than likely you're going to stick around. My price points for my subscriptions are very low. It's so that it can be accessible to new traders, to even executives, so that they can get that really great, quick, concise executive summary that I provide in the DP Alert. So I'll put the coupon code in the chat box. And if they want to get that 2-week trial, that's an excellent opportunity. But I will be doing a special for Thursday viewers as well. So
that is fantastic. I can't wait. And I think our listeners cannot wait until Thursday.
Yeah, and your spot's going to be 4 p.m. Eastern time on Thursday.
I believe that was this.
And do you want to talk a little bit more about, what you're going to talk about on Thursday?
I'm very excited. So, when you let me know that I could do something more live oriented, what I'm going to do is talk about how I trade in the shorter term, how I use a 5-minute candlestick to time my entries using my exclusive price momentum oscillator with hand in hand with the RSI. And it will improve your timing on entering and exiting a stock by a great deal. My subscribers will tell you that. Those who are in my trading room will tell you that. So I'm basically going to give you a background on the indicators that I use on both that daily and 5-minute chart, but then I'm going to show you how you can use those tools to actually trade, which is what I do in my free trading room on Mondays, which I just popped out of to come in here. So if you're interested in trying out my free trading room, you just go to my website, decisionpoint.com. You'll see my lovely picture. You can click on that and register to check us out for that. But I'm going to basically go through in detail process that I do in those trading rooms.
Oh, that's fantastic. That's awesome. So we're really looking forward to hearing your presentation on Thursday. And I think everybody here is, and of course, a special offer. And yes. Archana, Yeah.
I'm saving it for Wednesday because I just started my company last year, so I have to sit and code myself on my website.
That is awesome. And I'm pretty sure it's going to be a good offer because you're so knowledgeable. I'm pretty sure it's going to be about options. Are you going to show us in your presentation and what you do? Are you going to do a little mini workshop within your time slot?
Yes, my time slot, I'm going to be teaching what is a diagonal and if it goes against you, how to adjust it too. So in this chop, you're not using a lot of money. And even if you have to adjust, you're not putting a lot of money in. So there are trades that can be done where it goes up, down, or sideways. You still make money in options. So that's what I'm going to be talking about.
Absolutely, and especially if it involves a really small risk amount, I'm in.
Yes, it's
Definitely.
going to be about diagonals.
Yeah, because it's so hard right now. Volatile markets are characterized by these really wide and wicked stops and risk levels, and they're definitely putting traders out of their comfort zone. And I think this is where Archna's strategies with using options, you're minimizing your risk to the minimum in these particular markets. And Archna, you're scheduled for day 2. Yeah.
On 2 p.m. Eastern time on Wednesday. Yeah.
On Wednesday.
Right?
Yes.
It's noon Central, right?
That would be 1 o'clock Central. So 2 p.m. Eastern time on Wednesday.
So 1 Central. Okay.
Yeah.
Okay.
Yeah.
Okay. Don't worry. Well, we're calling you.
No, I have it on my calendar. I'll just write it down again.
Okay. So I don't have a special offer for today. However, I am going to keep all the special offers for the big event, and I'm going to be talking about futures. I'm going to be talking about stocks. I'm going to be talking about anything under the sun that is tradable within a chart, pretty much, and how you can take advantage of price action. And I'm very excited to kickstart the event. David has done a tremendous amount of work. We have over 20 women in finance that are going to be sharing great insight into trading, into investing, into stocks, into cryptos, into futures, into Forex. So that's so exciting, and different styles of trading, day trading, swing trading, all these styles are going to come together in 3 days. And hopefully one day, well, maybe one day soon, David, what do you think we should, because we have been planning a live event, maybe not.
Sorry, you cut out for a second. So
Yeah.
Maybe, live event.
Maybe.
Yeah. Maybe
maybe a live event where we could actually meet.
Yeah,
maybe next year.
Yeah, that would be cool. That's a lot more work, but yeah. That's
So maybe a fusion. Yeah, maybe a fusion. We will have we would have, the live event that would be broadcasted as well online. So we'll think about that. Definitely. But you know what? We have been cooped up for so long. We just need that human interaction, and we just need to see people face to face.
Yeah, definitely.
So, yeah.
Yeah, as the travel stocks were going to go up, and then the Russia-Ukraine made everything go back down.
Yeah, so I literally, I can't wait until, everything is gonna run its normal course, and we will get into a new normal, let's say, because we don't want to say we want to go back into normal, because that would be regression. We want to look forward. Okay.
Right.
to a brand new, better normal.
Well, when you get prices moving down, that always means that that's giving you opportunity on the upside later. I mean, look at 2020.
Exactly. Huge buying opportunities. I mean, everybody knows that millionaires are, are profiting from down markets, and you have all these trading opportunities and all these investing opportunities. Think about the 2008 financial crisis, where everybody was very leery. I remember people, that I was talking to, they were pulling their money out of their accounts end of 2008, beginning of 2009, right before the prices started to go back up. That was the moment to add to your trades and not, exit your positions. Same here. So time is of the essence. These pullbacks are normal tendencies into the market. The market doesn't just go up or just goes down. The market is always going to be into this fluctuation. So there's always going to be growth. We just need to see where the growth is if we're on the long side. But as long as we're still swing trader, or like Archna is options trader, or Erin, there are always going to be, like Erin said, pockets of opportunities. I like that phrase. So there's always going to be money to be made into the market. And I think that this is one of the best, I wouldn't necessarily call it a job, because we're so fortunate. We stay at home, we don't have to travel. There's no gas expense, right? So I think that there's a lot of opportunity into trading. So if you're new to trading or thinking of getting into trading, I think now's the right time, even though it will be difficult for you to learn trading into this harsh environment, but it's definitely going to help you a lot. Imagine if you learn how to trade now, you're going to do so much better when you're going to get a trending market. You won't know what that, you won't know what hit you. It's going to be so awesome. Yeah. So I think this is a wrap, David, for today. If you have anything else to add.
I just wanted to mention that you're scheduled for 3 spots. You'll be at 5 o'clock on Tuesday, 1 p.m. Eastern time on Wednesday, and 2 p.m. Eastern time on Thursday. And
yeah.
So, Archna has a Substack. I'll paste that in the chat. Just some stats and more info about the big event. We'll be starting tomorrow morning at 10 a.m. Eastern time. And we have 21 presenters scheduled for almost 30 presentations throughout the 3 days. So we'll be going from 10 a.m. till at least 7 p.m. each night. Should be a good event. So you can access the live event at any point throughout those 3 days. Just go to TimingResearch.com, and there's a link on basically every page to access the room, especially TimingResearch.com/live. There's always access there as well. So, did you have anything else you wanted to add, Anka?
No.
Okay.
Erin, do you have anything else that you would like to add?
Just if you jump into that chat, I've got a couple of links there for my free trading room and that coupon for trying us out.
Awesome, guys. So hop on it. It's in the chat box. Just click on it. You get 2-week free trial, decisionpoint.com. Use the coupon code DPTrial2. Just click on there, and also Archna's site, and also the Subtract, Archna's Subtract. So hop on there, take advantage, yes, of these opportunities. Take a look and see what other traders are trading. I mean, this is such a great insight. I wish I had that when I started trading.
Yeah, definitely. So, okay. All right. So, let's That's it for today. Be sure to join us at 10 a.m. Eastern Time tomorrow. Also, be sure to subscribe to Timing Research on YouTube and your favorite podcast app to get instant updates on the shows and events when I post the archives. You can also just go to TimingResearch.com to get access to any of the past shows and events, as well as the recording for this event as soon as I can get it posted. And I just want to thank my guests again for today, Archna Jagtiani of ArchnaTrades.com, Erin Swenlin of DecisionPoint.com, and Anka Metcalf of TradeOutLoud.com. Thanks, everyone.
Thank you so much.
Thank you.
Thanks for having me.
Thank you.